I'm Sarah Borkson-Keto here in Los Angeles for REITworld 2019, NAREIT's annual conference. I'm joined today by Richard Stockton, President and CEO of Braemar Hotels and Resorts. Welcome, Richard.
Hi, good afternoon.
So 2019 has seen Braemar actively involved with many renovation and conversion projects. How would you characterize the portfolio heading into 2020?
Yeah, over the last 2 years, we've had 4 major capital expenditure projects we've been very focused on. One was the renovation of our Ritz-Carlton in St. Thomas. This property was affected by Hurricane Irma about 2 years ago. And we've spent nearly $100 million to renovate the property and bring it back up to a quality level even superior to what it was before. That property is coming back online November 22nd, so in a couple weeks. We've also taken 2 of our properties and up-branded them from the Courtyard brand to the Autograph by Marriott, one in Philadelphia, one in San Francisco, combined a little over $50 million there. And then we've built the presidential villa at our Bardessono property in Napa Valley. And that's 3 separate suites that can be combined into one big villa. And so the combination of these major capital expenditure projects has set us up very nicely for 2020. You know, these are 4 hotels out of the portfolio of 13. And so we're expecting to generate significant improvement in RevPAR and EBITDA across those 4 properties.
And what is the state of fundamentals in the luxury and upper upscale sector, and which geographic markets are currently showing the strongest performance?
Yeah, you know, we certainly have seen RevPAR growth slow over the last few years, and industry forecasts continue to be slow growth or low growth environment. That said, if you break it down into the chain scale segments, the luxury segment where we are predominantly focused outperforms the others. And so even though the industry average for 2020, many forecasters are saying is about 0.5%, luxury will do about 1%. Now, as I had mentioned before, with our portfolio, we have some interesting things going on as a result of some capital expenditures that we've invested the last few years that should allow us to be on a separate trajectory that's not necessarily related to the overall market. But your question was about geographic markets, and every quarter we do an in-depth analysis of the top luxury markets in the country. And for this quarter we have concluded that the markets of Austin, San Francisco, and Miami are all very attractive. And so we're spending more time focused on opportunities there. Some of the challenges in Austin, it's a relatively small market, right? So we don't necessarily see a lot of opportunity because there's just not many luxury hotel rooms there. San Francisco has been one of the best performing hotel markets in the country, and I think a lot of capital providers have noticed that. And so that gets reflected in pricing. And similarly with Miami, you have a lot of foreign capital interested in that market, which tends to result in lower cap rates. So nevertheless, we're looking at deals. We're interested in making more acquisitions, but we have to find the right deal.
And can you discuss the attention Braemar has been paying to non-room revenue, and what potential can you see coming from that category?
Sure. The single biggest contributor of non-room revenue outside of maybe food and beverage is our membership program at the Ritz-Carlton in Sarasota. And we have an 18-hole golf course at Sarasota. We have a beautiful beach club on Lido Key. And we've attracted over 600 members to join the membership club to use these amenities of that hotel. And so that's over $4 million a year in revenue just from that membership club. And so we've looked at the opportunity to do a membership club at our other resort properties as well. In addition to that, whenever we've done a lobby renovation lately, we've incorporated a corner market, a grab-and-go concept, which is a convenience for guests, at the same time a very good revenue generator. Another thing we've done is with our spas, particularly in our resorts, we've introduced dynamic pricing. So rather than have a static rate card, depending on the demand for the services, whether it be seasonal or time of day or day of the week, we can adjust the pricing. And so we'll reprint those menus and that pricing to react to demand.
Okay, great. Richard, thank you so much for coming.
Okay, thank you, Sarah.
And for more on REITworld 2019, be sure to visit NAREIT's website, REIT.com.